Joining us now is Katie Stockton, a founder and managing partner, Fairlead Strategies and portfolio manager for TAC Recent Market Weakness. And what the technicals are showing, that's what we're going to be obviously talking to you about, Katie. So obviously we saw the S&P 500 closing below that 50 DMA yesterday, falling through 6,700 for the first time since May the 1st. I'm just wondering, we're seeing some stabilization in the markets right now, but what does that tell you as far as the technicals?
Well, it is definitely a setback. It reflects weakened intermediate term momentum. We also see that on the weekly bar chart of the S&P 500, a very common technical tool, the MACD indicator, has flipped to a sell signal. And again, that's for the first time since May. So we are seeing this as a significant momentum shift. And yet, as you know, today we're seeing some gains, and that's likely in anticipation of Nvidia's earnings report. We're seeing the market somewhat oversold as we come into today's report. In fact, the futures this morning for the S&P 500 were oversold on their daily chart for the first time since April. So we have some firsts in here. The short-term oversold contrasts the intermediate-term loss of momentum. So with that in mind, we would look for any oversold bounce in here to give way to another downdraft.
Okay, what do you make of the setup as we head towards Nvidia's earnings? I mean, the stock itself is up around 3.5% right now after, obviously losing a lot of steam in recent sessions over the last couple of weeks or so. What have we got to hear here? Is this going to be sort of the make or break as to whether we can continue to see this rally have legs, or whether we're going to go back to that sort of risk off that we've seen in the market recently, particularly for tech?
Yeah, I think yes and no for Nvidia, in that we do think that there's a better chance of an oversold bounce in response to the earnings report as opposed to a breakdown. But Nvidia is right into key support on its chart around 180. And so that would be a natural place for buyers to step in. Of course, if they don't do that, well, then that is a setback. So far, so good, right? We're seeing a little bounce today. But if 180 is broken, next support is around 164 on the chart. That's based on a retracement level. Whereas if we see a bounce, we would expect it to be fleeting perhaps, because just like the S&P 500, Nvidia shares that same loss of intermediate term upside momentum. And that goes both in absolute and relative terms versus the S&P. Nvidia, of course, tends to exhibit upside leadership in strong tapes, and that's because it is essential to market sentiment, just given how big it is in part, but also because it is also the sort of representative of the AI trade. So if Nvidia falls off, well, it likely will also see greater declines from the AI trade. And that, of course, has really bolstered the broader market of late. So it is essential to market sentiment. We're watching 180 as key support. And if we see a little bit of a gap up, I would be skeptical as to its staying power.
Key support at 180, as you mentioned. We're at 187 and change right now, no doubt helping. We've got William Blair out this morning reiterating an outperform here, too attractive to ignore. Obviously, we've had a lot of analysts talking about how we're expecting to see them handily beating expectations here, and this is a fundamental piece of the AI revolution. To your point, it's being called sort of the Pied Piper of the markets. Let's just switch gears to what we're seeing as far as the performance in Bitcoin. Quite some interesting moves, obviously, since the record highs that we'd seen in October. I mean, coming off at nearly 30% since then. We did see a degree of stabilization in the market yesterday. We're pulling it back a little bit today. But I want to get your thoughts on just the connection here that some are actually making to US equities, and particularly the tech trade, because some have been noting that Bitcoin's decline then signaled the start of a broader risk-off shift in AI and tech stocks. And then yesterday, when we did see this outperformance across the space, then we saw the stocks coming off their lows. What do you make of this sort of correlation?
Well, it is highly correlated right now, but it is cyclical, that correlation. So at times we'll see Bitcoin highly correlated to the tech trade. Other times it's not at all correlated. So I wouldn't rely on that as necessarily a long-term input for Bitcoin, but it is a risk asset. So when we see declines, we are sometimes, looking for declines in other risk assets. So there is that positive correlation at times, of which now is certainly one of them. And yesterday's pivot, I think it is somewhat meaningful, at least from a short-term perspective, because coming into support, which is around 93,000 on the chart, it's sort of a hard test of that level, but not a decisive breakdown. So there is support not far from current levels for Bitcoin. And of course, it is already oversold after nearly a 30% downdraft. So while we don't have any clear buy signals yet, we feel that it's overdone in the near term. And maybe that helps foster that kind of oversold rebound in the broader tech space. And yet again, for both, it is at risk of being somewhat fleeting because the intermediate term momentum is still very much to the downside. So we'll be watching that key support around 93,000 for Bitcoin.
Okay, and I saw a note out this morning saying investors pulled more than $500 million from BlackRock's iShares Bitcoin Trust, which was the biggest outflow since its debut, which is notable in this environment. Something obviously to watch. Katie Stockton, thank you so much for your time. Really appreciate it on a day like this. Our founding managing partner, Fairlead Strategies and portfolio manager for tax.